All right, this video is for those of you who are trading the US market. I know most of you do not have MarketSmith because MarketSmith in the US is a bit expensive on a monthly basis. So, what I have done is in TradingView itself, there is this stock screener. If you see here, there is a stock screener. This stock screener can be used to filter the best stocks in the US market for the breakout trading style. And let us discuss that. I will show you a technique today which you can apply to find the best stocks in the US market, which are uptrending, which are in stage two, which could be forming bases, and you could buy the breakouts. But for that, we need stocks which are having very high relative strength. Relative strength is a concept which I have discussed before, which I will discuss here as well. So let us first look at how many stocks are there in the US. So if I go here, I type how many stocks in Nasdaq. Okay. So let's see what Google tells us. Nasdaq Composite Index, also known as Nasdaq, covers more than 2,500 stocks. So there are 2,500 stocks in Nasdaq. Let's see what about NYSE, New York Stock Exchange. So as of December 2023, NYSE had 2272 listed companies. So 2,272 plus 2,500, which is 4,772. This is the number of stocks that we should get in the US market if we are only looking at common stocks within Nasdaq and NYSE. Okay, we are not including ETF, we are not including mutual funds, we are not including REIT, we are not including depository receipts and things like that. When you add those things, then the number goes beyond 10,000, maybe 17,000. Okay, so let's look at the filter. So I have created this filter called as USA Universe, and I have selected the markets as US market here. Currently, there is nothing in this filter, so I click here. So as you can see, there is nothing here. So first, I go to symbol and I click common stock. See, there is no, I am not including close-ended fund. Before I put common stock, let us see how many securities we have. See, in the US market, you can trade 17,580 securities. Okay. Now that's too much of a number. This includes things which are not common stocks. It could be funds, mutual funds, exchange traded funds, and things like that. So we need to narrow down this list. So symbol type is common stock. Now let's see what's that number. Now common stocks are 10,509. Now this includes all the exchanges in the US market, but we only want Nasdaq and NYSE. So let us do that. Exchange, see, it contains over the counter and NYSE ARCA. I don't know what this is, but this is the main thing, NYSE and Nasdaq. Now let's see, we should have, you remember that number we calculated 4772. We should either get that number 4772 or a number which is less than that. Why? Because there could be a stock which is listed both on NSE as well as Nasdaq, correct? So it will be double counting. So we need a number which is either 4772 or less than that. So let's see what we get here. So we get 4664, which is fantastic. So roughly, we can say that there are maybe 100 stocks which are common between Nasdaq and NYSE. This is what I understand from the filter. I personally don't trade the US market, but from the filter, I can arrive at this conclusion. So overall, we are looking at 4,664 common stocks in New York Stock Exchange and Nasdaq, the two most prominent stock exchanges, the two biggest stock exchanges in the entire world. Okay, so this is the cream of the crop, 4,664. Now, a very important point. Remember, I had spoken to you about price strength or relative strength. Let me come closer to you. Okay. So what is price strength? Basically, what we do is we take the 52-week performance of a single stock and compare the 52-week performance of that particular stock with all the other stocks in the stock market. Okay, and that gives us a ranking. So, for example, if a stock has a relative strength ranking of 94, it means that that particular stock has done better than 94% of all the stocks in the US market based on its 52-week performance. Or we could say that this stock has a 52-week performance which is better than 94% of all the stocks in the US stock market, which is this. So in this filtered list, if a stock comes within the top 10%, so that means based on 52-week performance, if a stock comes in the top 10% of this list, that means it has a relative strength of minimum 90, correct? Because if I look at the annual performance, see, this is yearly performance. If I click on this, let me scroll up. So if I click on this, it will show me stocks in the descending order. See, best performer, second best performer, third best performer, and so on. Okay. So if I look at this list, entire list in the descending order like this from here till down, if I just take the top 10% and just ignore the remaining 90%, then I am only looking at the stocks which are having a relative strength of minimum 90, which means these top 10%, that means these 466 stocks out of 4664, these 466 stocks are doing better than the other stocks in the stock market based on a 52-week performance. So let us download this list because we only want to focus on stocks which are in the top 10 percentile, the best of the best, the cream stocks. Okay. So that's a filter that we are using. So I click here. So see, it's downloaded here. I will open that file. So this is what we get. This is what we get. See, yearly performance. This is already in descending order. So yearly performance from largest to smallest. So as I said, let's go to 467, A467. So till here, okay, we above this is 10% of the entire list. So below, whatever comes below this, I will delete all of this. See, it is still 4667. So I'm deleting all of that. Okay, now I only have 466 stocks. See, here count is 466. So I'm only looking at the top 466 stocks out of 4664 because this is the stock which is in the top 10 percentile. So all of these 466 stocks that you see here, all of them have a relative strength of minimum 90. Okay, that's a good basket of stocks to select from because these are leading stocks. These are stocks which are going up. These are stocks which have institutional demand because if there is no demand, how can the stock go up? Okay, so this is number one. If you notice here, now carefully observe. If you notice here, the lowest performing stock in this list is 62%. So in the filters in TradingView, if we type yearly performance as 62, okay, we will, in short, we will get the short list of stocks, okay, which are having a relative strength of 90. So yearly performance, if we put a filter which says yearly performance is above 62%, okay, that means all the stocks in that list have a relative strength of 90 or more than 90. So we will put that filter. Another filter we can put there is, see, you see this price here. If we sort by largest to smallest, see, if we come down, see, there are penny stocks here, price stocks which are less than $1 in price, stocks $3, $4 stocks, okay, $5. So let's put a criteria. Let's do one thing. Why not look at only those stocks which are $10 or more than $10? So You see, this is more than $10. So this is 9.88. So if I remove this, all the stocks, if I remove, which are below $10 in price per share, now let's see how much list we get. We get a list of 325 stocks or 324 stocks. So these are stocks, all of them have a relative strength of more 90 or more, number one. Number two, they are not penny stocks, they are priced $10 or more than $10. These are the two criteria that we have selected here. I'm not looking at volume right now. I'm not looking at market capitalization. Okay. So let's go there. So let's put the filters. So I will go to yearly performance. Yearly performance is above, I will put 62 here. Okay. See, the number has come down to 466. Now you understand why I was saying 10%. So if the total number of stocks is 4664, just take 10% of that, which is 466, which you have here. Okay. These are the best performing 466 stocks based on their annual performance. Okay. Now this list we will shrink further because we want to add the filter of price. So I will write price here. Price is above 10. Okay. Price is about 10. So now you have 324 stocks. So this is extremely important. So a stock which has got a price of $10 or more, a stock which has given at least 62% return on a 52-week performance basis, and a stock which is in the top 10 percentile. Okay. This is what you get, 324 stocks. Now, can we add more filters here? We know that we want a stock where the price is above, price should be above the 50-day simple moving average. So let us put that. So SMA 50. So SMA 50 is below the price, correct? And we also know that the SMA 200 should be below SMA 50. Okay, when I put these two filters, let us see what we get. See, now we have 250 stocks. Now you tell me, is this list okay? Can we check 253 stocks on a daily basis? Because every day you do this kind of filtering, you are most likely to get this number of stocks, because we are starting with basically 4,500 to 5,000 stocks and we are arriving at 250. Now tell me, what is 250 as a percentage of 5,000? Okay, it's roughly 5%, right? So we are looking at the top 5% of the stocks in the stock market because we have added some more filters. So that means we are rejecting 95% of the stocks in the US stock market because of the other filters. An additional 5% 5% stocks got kicked out. Okay, so can you check this list every single day? All of these are stage 2 stocks where the price is above the 50-day moving average and the 50-day moving average is above the 200-day moving average. Now if these stocks, if those stocks which are forming a base, okay, don't you think that's a good opportunity to buy a breakout? Okay, so this is a filter which you could use. I am not using volume, by the way. Those are things that you can check when you are looking at the chart. Patrick Walker, a veteran trader, recommends that you only trade those stocks where the average daily volume is minimum 200,000 shares. 200,000 shares traded daily on an average. Okay, so I am not putting that filter here, that you can check on the chart itself. But this filter, I think, gives you the best of the best stocks in the US stock market. Apart from this, if you want to still refine this list, if you want to take positions in stocks rather than swing trading positions. Now, what is the difference between swing trading and position trading? In swing trading, you're trying to capture shorter moves like 20%, 30, 40% in maybe 1 or 2 months. That is called swing trading. Position trading means once you take a position in the stock, you are willing to wait through the pullbacks or natural reactions and ride the stock for a longer period of time. Maybe as long as the stock remains above the 50-day simple moving average, you would want to stay with the stock. Now, with that calculation, you could stay in a stock for 6 months, maybe 1 year, or even more. That is called taking a position in a stock and trying to capture the maximum gain in the stock as long as it remains in stage two uptrend phase. Okay, that is position trading. Now, if you want to do swing trading, then this list is enough. You could identify basis and you could try to trade the breakouts. Your hit rate or your batting average is going to be slightly lower if you don't use more filters in this. If you want to make your selection criteria more refined, you could use two more filter criteria, which is used by Patrick Walker, which is quarterly earnings growth and quarterly sales growth. So let me explain. Let's look at this list. Let's take any stock in this list. Any familiar name you see here, let's take one of those. So let me scroll down. Let's see if we have NVIDIA here. NVDA. Yes, NVIDIA is here. So let's go to NVIDIA chart. So this is NVIDIA. Okay, it comes in that list because NVIDIA has done well. Okay, so if I go here, I click on these three dots. I click on financials. Okay, TradingView is giving you all the information, by the way. See, now, what Patrick Walker says is you go down, see there is net income here. It is shaded. Now, net income, this is the latest one. Okay, Q1 2024. This is the latest one. So the net income is 628%. So basically, what this means is the current reported quarterly earnings. You have to compare the current quarter with the same quarter last year and see what's the percentage increase. That is 628% as far as, if I understand this correctly. Okay, let's see Q1 2023, this one. So let's look at, this is 2 billion. 2 billion has gone to 14 billion. So that is why this number shows 600% rise. So what Patrick Walker says is that this number should at least be 40%, 40%, which is comfortably there in this. Now, if this number is less than 40%, then what he says is the sales, the total revenue, the average of these two, the recent 2 quarters, the average of these two should be 40%. So if you take that entire list, if you take this list, this is 253 stocks, right? Now, if out of 253 stocks, let's say you get a list of 20 stocks, which are forming a base and which meet all your technical criteria on the chart. So now you have 20 stocks on your watch list. Now, you can't buy 20 stocks next day. How will you filter those 20 stocks? Use the Patrick Walker's earnings and sales criteria to further filter your stocks. For each of those stocks, see whether the recent quarterly earnings is 40% or more, or the recent 2 reported sales figures, quarterly sales figures, is the growth, average growth 40% or more. So I'm sure if you use that criteria, probably out of 20, you will come down to a list of maybe 5 or 7 stocks, which is a decent list of stocks to check for the next day. If any one of those 7 stocks starts to show good volume and starts to push through the yellow line, which is your buy price, then you could potentially purchase that stock. Remember, you are selecting the 5 best stocks out of 4,664 stocks. So you are continuously refining your criteria. Now, one disadvantage to using this method is every day what you have to do is you have to sort this list. Okay, every day you have to first download the list. Okay, you start with filters, put common stock, put Nasdaq, NYSE, okay, and then download the list. Then you sort the list by descending order of 52-week performance. Take the 466 stock, look what is the least return in that 466 stocks. What is the least return? In our case, it was 62, right? Now, this number will change every day. Okay, tomorrow it might be 75, maybe it could be 55, whatever. But you have to look at the top 466 stocks because that's 10% of the total. In that list, what's the lowest stock? What's the lowest return? That number you put here. That gives you a list of all stocks which have a relative strength of 90 or more than 90. Okay. Out of those stocks, you remove stocks which are below $10, which means price is about $10. Okay. And you put the moving average criteria. You will get a decent number of stocks here. I think this is a best stock. I think this is the best list to select stocks from for the next day. Remember, we are only talking next day. We are not looking at weekly charts or anything. We just want a few stocks which we could buy in the next day, because these are all stage 2 stocks, could be forming a base, could be breaking out of a base, correct? So we want those kind of stocks. These are already stocks which are doing better than 90% of the stock market, remember, in terms of 52-week performance. When you add earnings and sales figures to that, see how refined your criteria becomes, and you are going with the best of the best. So if you are adding quarterly sales and earnings numbers to your selection criteria, then it makes sense to take up a position in the stock for a longer period of time. You could stay with the stock for 3 months, 6 months, 1 year, maybe 1.5, 2 years, because you are investing in a fundamentally good company. Okay. The stock is doing well for the right reasons, for earnings, sales figures. So the more strict your criteria, the larger the position size you should take, and the longer you should remain in the stock. The looser the filtering criteria, the shorter the move that you should play, and the lesser the need to look at the fundamentals. So I hope you understood this filter. Try using this filter and let me know how it goes for you, because these are the best performing stocks in the Nasdaq and the NYSE. Okay. Thank you so much.